What on earth is happening to the market these days? Everybody wants to know. There are a million news articles written about what's happening nationally, and I really want to talk to you guys about what I think is happening locally in the Hudson Valley Catskills, what kind of projections for next year might be, and why you may or may not want to move ahead with buying or selling a home right now. Very exciting stuff, at least for us, and hopefully everybody who's here joining on a lovely Tuesday evening. And my name is Megan Brenn-White. I'm the head of the Upstate Curious team of Keller Williams Realty, Hudson Valley North. I am currently in Brooklyn in a hotel, so hence the blurred out background. And we are exploring opening an office in Brooklyn. So, oh my God, it is very exciting. After 16 years of living in Brooklyn myself, a lot of people on our team lived in Brooklyn. Almost all of our clients are from Brooklyn or somewhere in New York City, almost all from Brooklyn, frankly. Yeah, we are looking to see if we can find a way to do it. Early days, but just thought I would let those of you who are here know that. So we do have a lot of agents on the call here from the team. They all just announced themselves in the chat. You guys can definitely write any questions in the chat, comments, call bullshit on anything that I'm saying. Happy to hear any and all of it. The goal of this is to, kind of just share with you what we've been thinking and talking about. Obviously, I know everybody says this when they're projecting things, but we're not fortune tellers, and this should not constitute actual necessarily financial advice or something. But our roles as agents is really to advise our clients and consult with them about all of the aspects of buying or selling, including timing. So this is obviously a very different market than we were in a few months ago. And I'm sure you guys have read tons of news headlines and, may think the sky is falling or think, yay, I have an opportunity to really get myself a bargain here. And I think that it's in some ways not that different than it was a year ago. In some ways it is different, but I want to go over all of it with y'all. So, and that what I would say is that our team, to give some context for those of you who don't know, we do roughly 200 transactions a year. We're the largest team in the Hudson Valley and Catskills, and we do cover 8 or 9 counties. We're actually members of 6 multiple listing services. So the agents on the team and the team as a whole, we share a lot of information with each other. If an offer gets accepted, we share what the terms were, what the price was, if they had to negotiate. We try and be following all rules of anonymity and confidentiality, of course. We try and be as collaborative as possible in terms of sharing information that could indicate early changes to the market that could help our buyers or sellers. So that is what we do. We talk about this a lot. We have meetings every Monday and Thursday where we basically talk about what everyone is seeing. There are buyer's agent meetings, listing agent meetings. We have it split on our team. We are always talking about this. We also have a Slack channel called Things That We're Learning, where people post something about an interest rate shift or a new product they heard of from a mortgage broker, or something anecdotal. So we try and get as much hard data and also sort of qualitative information as we can. So without further ado, the things that are impacting, the thing that is impacting the market pretty much is the interest rates. I would say that's the big news. We're over 7% a lot of times for interest rates, which, no one has seen for a long time. My first apartment, I think my second apartment I bought in Brooklyn was definitely in the 6s and 5s is people who are not super old remember that. like me. I had always just heard tales of the double-digit interest rates from the 70s. I did not experience that as an agent. Getting into the sevens starts to be pretty significant. Getting into the sevens after 2 years of really dramatic price increases starts to be even more significant in terms of affordability. And that is one of the things that I think is hard in this market, is that, you know, to be able to buy a home in this market, you really have to just like embrace the fact that what you're buying, like, yes, you would have been better off buying in 2009. You would have, like we all would have. I always tell the people on my team that the story of the 2-family brownstone I could have bought in Clinton Hill for $625. I guess it was around 2008, 2009. And I was like, no one will ever buy or sell a 2-family brownstone in a pristine neighborhood in Brooklyn for $625. That's outrageous. And I'm still kicking myself about that decision. So, you know, I think that one of the first things I want to just say is that, and the most important thing is that, like, we can't turn back time and we can't really predict the future. So actually, if you hear nothing else, like the one thing everybody agrees on is that it is very hard to time the market. It's the same thing with stocks. Like people, you know, they talk about, I forget what you call it, but like index fund investing, where you're averaging, I can't remember, dollar cost averaging, I can't remember what it's called, where you invest every month and then over time, that is, you know, that gets you through highs and lows and whatever. The same thing is true with real estate, is that like, we can't know what's going to happen in 6 months. We really can't. We can't really know what's going to happen in 3 years. I mean, nobody predicted COVID, right? Like, and I can tell you that when COVID happened, when it started, we all were on Zoom calls every morning talking about how we wouldn't do business for a year and how the market's going to stop and we all should get like other jobs essentially. And then ended up with 2 years of like the wildest number of real estate transactions and the, you know, the biggest price increases ever in a short period of time. So I think that's just really important to say, is that like, if you hear nothing else, just know that as a buyer or seller, if you want to buy a home here or you want to sell a home here, I'm going to give specific reasons why I think it might still be good for either side to buy or sell now. But if you want to buy or sell a home, you might as well do it, because honestly, nobody knows. And that's it. And I think that the really important thing is that literally nobody is projecting anything like the price crashes that did happen in 2008, 2009, 2008, I guess. They're just not, because that had very different fundamental economic reasons. That was largely because the banks were going a little wacky with their lending. I mean, and also not just wacky, but also, you know, horrifying predatory lending and lending based on nothing. And so a lot of people owed a lot of money on their homes, and there were a ton of foreclosures, and that led to prices dropping very dramatically. That is not going to happen this time around. There are a ton of people in the market who have a ton of equity in their homes because either they've owned them for a while, or as long as they've owned them since, you know, even since last year, they would probably have equity in their home. And that's a thing that's like important to note, is that this year, 2022, prices average and median are still going to end higher than in 2021. So as much as we're talking about interest rates are going up, that's slowing the market, prices are still higher than they were in 2021, which was a ton higher than 2019. We go back to our first normal year. So it's a strange time, because there's not projected to be any foreclosures there, or, you know, minimal. Luckily for people, there are a lot of people who refinance their homes in the past couple of years. A lot of people refinance their homes in the past couple of years. And those interest rates that were like under 3%, 2.5%, whatever, that I would say that everybody basically I've heard says that will like never come back unless there's, I mean, if there's like another possibly world-ending crisis like COVID, then sure, like maybe that'll happen. But those numbers were a real anomaly. So that is important to know, that like, I wish I could go back and buy everything at 2.5% also in 2019, but I cannot. None of us can. So I think that the fact that people have these interest rates, though, mean that the fact that homeowners might have these interest rates that are below 3%. And there's research about this, and where they have equity in the home, they don't necessarily have to sell. It makes it really hard to sell, because if you're going to move from a 3% interest rate to a 7% or 7+% interest rate, even just buying the same house is going to cost you, like the same price house would cost you so much more per month. But your house that maybe you bought 5 years ago now would cost, 30% more anyways, or more. So what this means is that the problems that we've had with inventory are even more dramatic than they were. So this is kind of interesting because, most of these trends are really national. They are very national. And what I would say is that what we're also looking at is what's different in our area. And, one of the things that is possibly different in our area is that because we had we are one of the areas in the country, in the world, that experienced a big population shift, or not even necessarily a big population shift, but a huge increase in demand for homes because of being able to work from home. So because people could work from home, people, like, they were buying things and they didn't want to necessarily be in cities during COVID. I think a lot of people who were just going to buy a place, maybe on the fence about it, just were like, screw it, I'm buying a place. And they had interest rates of whatever, 2.5% that are very enticing. Even if you don't know how enticing that interest rate is, what you do is you are able to calculate your mortgage and your cost per month, and you go, I can afford this. No problem. Maybe I Airbnb it a little bit on the side. No problemo. It's different. That is a little different now. So one of the things that was interesting, I think, about September, and I have a bunch of charts and I can look things up and all of that. So if anybody, wants me to, I can. But one of the interesting statistics that I found was that pending sales for September, so September is the latest data that we all have, they were down 31% nationally, and they were down 48% in Ulster County. So that means, 40. So here it takes almost 3 months to go from an accepted offer to closing. So we won't see what happens to prices or to a lot of things. We're like always 3 months behind, or maybe even 4 months behind, because we get the September data in October, and the September data reflects deals that were done June, basically. So kind of when we look at closings in September, we're looking at deals that were put together in June or July. Cash is a little quicker. So pending, which is an accepted offer, and I think usually it also means under contract but not closed. That's not what it means in a lot of our MLSs, but I think that is what it means in these statistics. The fact that it's down 50% is shocking. It's kind of shocking to me, honestly. It's like, whoa, that is a lot fewer deals. And I think the fact that inventory is down so much is a big part of this. So it's like we already had, and I can definitely pull up, let me just check this out here. So so inventory is down 14% in Ulster County from September of 2022 to September 2021, 14% fewer homes. And the month supply of inventory in Ulster County, and again, I'm just using Ulster as an example. I have data in other ones, but Ulster has a little bit more of a detailed report, is we're at 4.8 months of inventory versus 4.3 months of inventory last year at this time. So 6 months is what's considered a balanced market. So we are still in a buyer's market. That's just real. And September, so if you look at, so September also was down 12% in new listings versus last year. So, it's really that pending sale things that is, I don't know, it's so dramatically different. It went from 184 pending sales to 96. And, year to date, we're down 22% in pending sales. Interestingly, the prices are up almost 11% still, September 2022 versus September 2021, 11% flat year over year. So year to date, that is kind of wild. So the average sales price in Ulster County is now $517,000. Median sales price, which is only up 7%, 7.6%, is at $410,000. So these were in the 200s not that long ago. And I think it's important just to note also that the average, I don't know, maybe everybody knows this, maybe you don't, but like on average, home prices go up 4% every year. So that's like when you track over time, that's kind of the number people say you can use for appreciation for property values. So a year, like if we hadn't had such wild increases, a year that was up, where did I just say here, 11% in the average sales prices would be like a wild thing that everybody would be talking about. So what is this? What exactly is going on here? What we're saying, kind of more anecdotally is that there's a couple of things that are happening, but, one of them is that the homes that are really well designed, ready to go, in a town that you can still do short-term rentals, that is important because a lot of towns are having, more regulations around short-term rentals. If a home, fits those criteria, it is very likely to be priced relatively the same as it would have been 6 months ago and to have multiple offers still, or to be priced lower than it would have been 6 months ago and have multiple offers. So the thing that is kind of sucky for those of you out there who are not cash buyers is that the trend of there being cash buyers is actually increasing because they are not bummed out by the interest rates. In fact, people who have cash and investors, they are looking at this and go, great, this just took a lot of people out of the running. Like the interest rates actually made it unaffordable for a lot of people. So let's go, let's buy some stuff. That is really happening. So I would love to say that, like, not hating on any cash buyers, we love you guys, obviously, but like, I would just say that, like, if you are getting financing, it is just as challenging as it would have been a few months ago. One of the things that's kind of interesting also that I just wanted to mention about interest rates is that a lot of people, and including us, were like, if you don't like the interest rate, get an adjustable rate mortgage, where it will adjust in like, 5 or 7 years or whatever. And at this point, my understanding is the difference between adjustable rate mortgages and regular mortgages, regular conventional loans, it's not that different because the banks started giving out tons of adjustable rate mortgages and kind of had to pull the brakes on that for a number of kind of technical reasons. So I will say one thing that a lot of people don't know is that commercial loans are definitely, I think, almost always lower than residential loans right now. So if you want to buy a home as an LLC, which is very easy, you just tell your attorney you want to do that, or tell us you want to do that, and then we write an offer, and the LLC doesn't have to be founded first. We can put you in touch with commercial lenders. Those rates tend to be better, and that's actually a good thing if you are interested in doing short-term rentals, because again, not an attorney, this is not legal advice, but it helps protect you some with liability and things, and might open up some different options in terms of tax deductions, et cetera. So that is something that you could explore. So in terms of crystal ball land, what do I think is going to happen? I don't know. That's the secret of the market update. No, I mean, what I would say is that most people think that the interest rates will be back down in the 5s in the not too distant future. You know, maybe by next fall, the Fed will, I mean, a lot of the things that the Fed is going to do to combat inflation has already been priced into the mortgage rates for this year. So if inflation starts to go down, if they start to have a recession also, then we might not see any more increases. In the short term, though, and short term, I mean the next like 3 to 6 months, I've heard different people say that the interest rates could kind of stay where they are, like, or maybe go up to 7.5%, 8%, or could go over 10%. I've heard both things from people who are smart. So they also don't know. If it goes over 10%, I think psychologically that would be pretty hard for a lot of buyers to stomach, and financially pretty hard for a lot of people to be able to afford things. So, you know, the kind of good news is that I think the average time that a recession lasts is 11 months. In this case, weirdly, like if we start to have a recession and inflation slows down, the mortgage rates will probably go back down and you'll actually be able to afford more house for the same amount of money, which is kind of exciting. Why I think buyers, I'm going to go through now. Well, first I'll pause here because I'm giving you guys a lot of information. Does anybody have any questions that they want to type in the chat? Anything they want to talk about, you know, before I talk about why I think buyers should buy and sellers should sell?
Sorry, I can't type right now, but I do have a question. This is Sha.
Sure.
Can you just go back to that point about buying it as an LLC? That seems really intriguing right now.
Yeah. So basically, so a lot of homes are purchased as LLCs, and you would need to talk to a commercial lender and you need to talk to your attorney to do it. But I've done this process myself, and you basically just put in a normal offer. The attorney will help you create the LLC while you are, what am I trying to say? While the contract is getting drawn up and everything, and the contract will say that this property could be assigned to the LLC. So it's something people are very used to doing. Commercial rates had been higher than normal residential rates for a really long time. When residential rates were like 2.5%, you know, like nobody, I mean, you wouldn't look into this unless you needed it for liability issues. Now commercial rates are lower. So it is worth looking into. But yeah, I mean, I'm also happy to answer questions. I mean, either we can bring a commercial banker on or an attorney even someday, but essentially it's pretty easy. The insurance and things cost more, but I think that, I mean, we use proper insurance now, and that is for short-term rentals. And short-term rentals, I mean, they have very like extensive coverage that goes well beyond Airbnb, et cetera. So I think, oh, that's a great point. So Shaw, that you need to put down for a commercial loan, the one downside is you have to put down 25%. So it's higher down payment. Now it's lower interest. So that is true. But yeah, it depends. You know, again, everybody has different goals for why they want to buy a place, right? So new construction versus the secondary market. So, okay. Let's just like start to answer the question why I think buyers should buy now. So one of the reasons buyers should buy now. So developers in particular, people have really pulled back from buying new construction. So like we have an amazing home right now that's listed with Hudson for $795. That is going to be absolutely stunning on land in Sullivan County. It hasn't gotten an offer yet. And literally the market for new construction that isn't built yet has really dropped a little bit. No, not dropped a little bit, dropped a ton. And actually people are worried nationally that builders are all stopping building because of this, and that we're going to end up with even less inventory and more problems. So one of the reasons buyers should buy now is that there are specific categories where you can get bargains. And I mean, maybe not bargain might be the wrong word, because honestly, you're probably still going to be paying more than you would have in 2019, but you could get a really good deal. New construction is one of the areas where you might be able to negotiate a little bit more. Maybe the builders' costs have all gone up a ton, so they can't, like, they have to make a profit. Otherwise they're going to start, otherwise they just won't do it. But that would be something to consider. And again, we have that amazing Hudson listing. We actually have a Neville house that we've listed for 1.2 million. That's fully furnished. That's on beautiful land with a creek that is so ready to go. And that is less money than building one of the houses in one of their other developments. So I think that there are some areas to get some bargains. Also, anything that's not perfect, literally. Like right now, because so many buyers are waiting, this is a great moment to go in and look at stuff, because, investors tend to run counter to the market. They will sell when things are high, or actually they'll probably hold forever, but they will definitely buy when things are getting lower. It's because most people go, I'm reading about interest rates, I'm reading a headline, and now I'm not going to buy anything ever. So what we're seeing is the unicorn houses that are awesome, that are perfect, are going nuts. Other houses are sitting on the market for the first time in 2 years, and they're dropping prices, and they're, willing to negotiate on inspection. It is definitely shifted more in the buyer's favor in terms of like being in that position. That said, the super awesome house that, still going to get like 1 million buyers. And so this is, obviously this is always true. If you're willing to take on a little bit of work, or like you are okay with something that somebody else might not be, like, I don't know, being close to a road, or being a little far from a town, or needing to redo bathrooms or something. Now is when there was a moment, especially in 2020, where people were just like, I do not care if it has a roof. I'm buying it. I'm getting out of the city. That we're not in that anymore. So that is good news for buyers. So I would say that is a reason to start looking now and seeing if you can find something you like. The other reason is that when interest rates go down to 5% again, that's also going to be all over the news, or to 5.5% or whatever it is, or they start going down. And then people are expecting another mini housing boom when that happens. So like prices already haven't gone down. Nobody is projecting. So far I haven't seen anybody projecting much decrease. Like it's, I think Fed, there was some big news recently because it was a projection of like 1.5% per quarter of decreases. I've seen as much as 10 to 20% for certain markets that got very overheated. You could argue that ours is one of those. But again, that's only going to be for specific houses, and that might not happen. Just as easily could go up another 10%, another 5%. It really could. So I would say that this is like, to me, if I were a buyer, I'd be hitting the road. We are seeing folks, our agents, we had more offers. Thank you, team. You guys are awesome. We had more offers accepted as a team in this year, October, than last year, October. Because we're hustling, we're finding those like deals, we're getting good listings in front of folks. So, stuff is still absolutely happening. So the idea so there's this phrase that's always like, you date the rate and marry the house, which means that you can always refinance. So basically, buy a house now that maybe has a little more wiggle room because there's not 1 million people in the market. And then if the prices go down to 5.5%, or the rates go down, you can just refinance. No problemo. And you will have gotten the house at a better price than it probably will be by then. Again, maybe, we don't know for sure. Also, if you're going to keep this house for more than like 6 months or a year, like right now, flipping is risky. It is. We don't know what's going to happen in a year. Construction prices are high. all these things. But like, if you're going to buy this house and live in it for more than 5 or 6 years, or own it for more than 5 or 6 years, you like the house, buy it, because in 5 or 6 years, probably on average, it will have gone up 4% a year. And there's so many other things. You get to use the house. You get to not pay for vacation. You get tax things. You might get some income from it. So that's, to me, is like, I would hit the road if I were a buyer. I really would. And I mean, and honestly, I am. I have, I'm purchasing another home right now. That's going to be awesome. It's going to be a mostly short-term rental in Roscoe, which is going to be great. And it's like, would that have been cheaper in 2019? 1,000,000%. Am I still psyched to own it? Yeah. Also, it's going to be totally cool. And I'll be able to be there with my family and friends and everything else. So, what I would say is, do I see a particular price range that is still strong? So I would say that, so I think this is still true. This is definitely true nationally, that luxury has sort of taken a bigger hit in terms of interested buyers and price decreases and things. And luxury is a weird market, especially upstate, because pricing is so hard up here, just because it's like, I don't know, like, what's the price of a mountain view? Like, what's the price of a ton of character? Like, you cannot be like, it's an 800 square foot condo in this neighborhood, and there were like 45 of them that traded, in the past like 6 months. We do not have that kind of, we do not have that kind of information. So pricing is somewhat of an art anyways, which is also good to keep in mind, that right now sellers are coming to terms with the fact that their house might not be worth as much as they thought it was, which, by the way, 1,000,000% happened during COVID also, because everybody during COVID was like, price increases, price increases, price increases. And we would talk to some sellers whose homes we didn't choose to list, who would say, my home is worth this much because it's beautiful and I love it. And I renovated it in 2005. Look how great it looks. And you're just like, nope, that home is not probably worth that much. So this is it's just to say that the asking price is just a number that the seller wants or needs for some reason, and that the agent will have given them advice that, they'll give them the best advice that they can think of given their current information, and then the seller ultimately decides. So it's a little random. Why I think sellers should still sell, and I want to say this, now we can go through some more of the questions, is that this could get worse. If interest rates, if you want to sell within the next year, if interest rates really go above 10%, then I don't know, kind of all bets are off, a little bit. I think then we're more likely to see decreases, or just like fewer and fewer pending sales, because buyers won't want to have those interest rates. Sellers won't want to sell, or it'll be like an all cash market. I don't know, but like, I think that like right now there is like, we are still getting amazing prices for our sellers. And the main point I want to stress here is that whatever a seller would get now is still going to be a ton more than they would have gotten in 2019. So even if you feel like, it's a bummer, I wasn't there in 2020, you had 1 million people bidding for my house. Well, that's true, but actually prices have gone up since 2020. Even this year, they'll have gone up. Even now they're going up. So, you're still going to be in a much better position. It just is not like a total feeding frenzy for houses, except for the really awesome ones, which is still a lot of the ones our clients want. So just be prepared that like, there's still a lot of multiple offer situations. We're doing a lot of strategizing with folks on the buyer's agents on how to get these houses. So I think that's important for the sellers, and also great houses are still doing amazing. And there are cash buyers looking for investments in this market. So, and we help all of our sellers with, if they want to figure out how to stage, either maybe they want to, not necessarily like full staging, because it's hard to find a company up here that does that, but maybe, we'll help people figure out what repairs they should do, what cosmetic updates. So we're here for it. So to get to the Julian's question, do I see a particular price range that is still strong? So, I mean, I would say that anything under 800,000 is still very competitive. And maybe even higher than that. So it just is like, just at the luxury end is where it is, kind of, and technically luxury in our area does start at around 750. But, once you get higher, I think that those buyers are, they have more significant, I mean, this is one of the theories, they have more significant stock portfolios. They're impacted more by things, various economic situations, and they seem to be waiting a little bit more. So we're seeing a little bit more time, for sure, more time on market with luxury homes. I would also say that one, well, whatever, I'm not going to talk about the inflation, but hey, I got that. Yeah, Peter writes, I'm used to 30 to 45 days from offer accepted to close where I'm from, Southeast. Is Hudson Valley longer on average, and why? Yes, it is longer. I think it is because New York is an attorney state. So there's attorneys on both sides of the deals. This is the best theory that I've heard. So you basically have an accepted offer. You have 10 days to do an inspection, which is also kind of a long time, although we do try and get people to move as quickly as possible. And then after your inspection, you might have some negotiations. Then it can still take the attorneys two weeks or so to get the contracts all in and get it, everything signed. So until that happens, you don't even technically really have a deal, which is nerve-wracking up here. And by the way, all of our advice is still true, and how we counsel buyers about, like, once you have a deal, you are going to fight until contract to keep that deal. It's just true, because there is so little inventory. People are coming in and making offers. The sellers are changing. This is still absolutely happening. It's okay. You'll end up with the right house. I guarantee you. But yeah. So it's like 6 weeks-ish, 6 to 8 weeks for cash deals, and around 3 months-ish, sometimes less, for financing. Things that are going quicker now, the towns, because there are fewer deals happening, the towns aren't taking as long with municipal reports and title searches. Inspectors are more available. Attorneys are less bombarded. Appraisers are more available. So the good thing is that all that stuff is easier. Oh, Monica already wrote that. Great. Okay, Kent. Really would love to buy a vacation home and use it as a short-term rental up there. Have you kept up with the discussions and rules coming out of the local governments in Ulster and Sullivan counties? Well, yes, we have. In fact, we have a whole spreadsheet about everything. And I mean, including even rumors about things and what we hear on the streets about a town that has a mayor who is a thing and a blah, blah, blah. So yeah, it's something that a lot of our clients want to do short-term rentals. And so it's something that we are very much on top of. And most of the agents on our team, so we have buyers agents that are spread all around these different counties, but each individual agent also works in a big area, just because we see that a lot of our buyers will happily look at a very big area because they just want to be within 2.5, 3 hours of the city, whatever it is. So all of us, as soon as we have information about anything, a news article, an announcement, a new Facebook group of short-term rental owners in a town, we're sharing that information internally. So that is real. We definitely keep track of that. And I think that what I would say about that is, if it were me, and sometimes it is me, who wants to look at something and use it as a short-term rental, I actually would feel safer with towns that do have regulations than that don't. Because if they have regulations, they've thought of them relatively recently. My feeling is that they're probably less likely to just totally dramatically change them than a town who doesn't have anything. So there could be things that happen at the county level. I have mentioned this before, but there is, I think, a general sense that Airbnb, like, eventually a lot of the restrictions are going to go to the Supreme Court, or there's going to be a case in front of the Supreme Court that then rules that the sort of town or countywide restrictions are not, they basically constitute a form of taking, which is against the Constitution, where you can't, like, the government can't take somebody's property and not give them compensation for it. So we had the first case actually in Rhinebeck. I can't remember if it was the town or the village, but it was the where they were about to enact new Airbnb regulations. And they said that based on a case in, I can't remember if it was Nashville or I think it was Nashville or Louisiana. Maybe it was either like New Orleans or Nashville, one of these places that has a lot of controversy around Airbnb. I mean, so do we, but they actually said, because this happened and because it was a federal appeals court, they're going to take it as like law that they can't, in this case, it was they can't give preference to people who live there versus people who don't live there. So a lot of the regulations around short-term rentals are actually like, you have to live there full time, or you can, like, you have to be there and just rent out a little guest house or rent out a room, or you can only do it for 90 days a year. I will also say that while this is happening, we're also starting to explore seasonal rentals. So we just did our first one for a beautiful home in Hudson Woods in Kerhonkson. We're probably going to list another one over in Ghent. And in addition to this being something that people have asked about, and I think, people do seasonal rentals in other vacation areas around New York, this is something that if you cannot do short-term rentals in an area, you almost always can do seasonal rentals. Anything over 30 days counts as a long-term rental and is, does not fall under those short-term rental rules. So that is something that we're following quite a lot. So yeah, I think that, like, I said, I said this for those of you who came through our newsletter. And actually, Monica or somebody, would you mind if you don't mind putting the buyer questionnaire in the link to the buyer questionnaire in the chat, and then also maybe the seller questionnaire, that would be awesome. But essentially, whatever, write to info@upstatecurious.com, write to Megan@upstatecurious.com. I'll make sure you guys get to the right place. But I have to say that I think that you are in very good hands with our team. I am very proud of the amount of thought we give to this stuff and the amount of collaboration that we have, and the time we spend reading local newspapers and watching Zoom town meetings and everything else. So, I think we do see ourselves as having a big responsibility. This is not just like opening doors or taking pretty pictures. Not at all. From the seller side, where we think a lot about how to strategically position the home and yada yada. Oh, thanks, Monica. I appreciate it. So if you're a buyer and you want to work with us, you can click on that one. If you're a seller and you want to work with us, you can click on that one. There, that's all I'm saying about that. And also, you don't have to work with us right now. Like, this is just a little questionnaire to start the conversation. This is not, you're not like paying money or signing your life away. Not at all. Any new developments or trends in the long-term rental market I'm seeing? So this is interesting because, okay, so there are a couple of things that are happening. One of them is that, long-term rentals are still that is a very underserved market. I think though that it is like they're not that it's an underserved market. There are just too few long-term rentals anywhere, like in the country, and definitely also in the Hudson Valley and Catskills. A lot of the problem that we're seeing now is that even when people bought homes in the past couple of years, like if somebody bought a home in the 80s or even in 2009, maybe they bought that house for $200,000 and now they could rent it for $1,400 or something. I don't know. Or maybe they could rent it for $800 because that like covered their costs by now because they paid down their mortgage. Now, if they sell that house for $600,000, especially if someone gets a 7% interest rate, they have to charge a lot more. And we are seeing we listed one set of rentals that were 3-bedroom, 2-bath apartments, and they were listed in the 2000s and did not rent right away. it took a minute. I mean, they did rent, but it took a minute. So I think that the rental market, I know that there's a ton of demand at the sort of lower price ranges. I don't know where that kind of stops. So that is a fact. The other thing that's happening is that a lot of towns are very concerned about tenants, and rightfully so, about tenants being displaced as homes change hands. And again, like if you bought a home and the rent no longer covers your mortgage, it is hard. I mean, most people can't afford to continue to rent it at that lower price. And so there are, if you've seen the phrase good cause eviction laws and rules and regulations passing in different areas and proponents of it in different areas in the Hudson Valley. And that would kind of makes it like rent control or rent stabilized apartments, where you can't kick a tenant out even after their lease expires or when the house gets sold. So you have to have good cause. You have to take them to court and say, they're being noisy, they haven't paid the rent and whatever. But so the challenge here is that, like, as we know, like, I mean, maybe you don't know, but like, it's pretty hard to evict somebody. It's expensive. It's a long process. New York is very protective of tenants' rights. Again, I don't have a problem with that. But if you wanted to sell, like, let's say you bought a multifamily and you wanted to sell it, and this rule was in a place that where you owned it, the new buyer basically is going to inherit those tenants until they want to leave, or unless they have good cause to evict them. So it's just something to like think about that kind of changes it. Oh my God, Sarah, thank you. Definitely the best team in the Hudson Valley. Oh, thank you. Jess is saying there's such a need for long-term rentals. Ooh, this is a good one. William, do we expect the short-term rental market in the area to be as strong in the next few years as it has been in the last couple? That's it. That's an important question. So there is anecdotal evidence, and I don't know if you guys saw, there was like a whole Twitter storm about like the Airbnb apocalypse. I can't remember what it was called, but it was like Airbnb and apocalypse together. And they were just like, I don't know, somebody tweeted something like, I have fewer people renting. And then everyone's like, yeah, screw you, because Airbnb sucks and it costs more than hotels. And they make me like take my sheets off my bed and take my garbage out and then pay more money. And anyways, Airbnb came back from this. This was like last week. And they were like, y'all, we've done more nights than ever before. This is not happening. You're good. But anecdotally, I will say that people in the Hudson Valley and Catskills have said that their occupancy rates are lower than they were. That's true. I've heard it from enough people that I know that has to be true. Now, granted, again, during a pandemic, when all of a sudden everybody could work from home, of course the occupancy rates are going to be higher. And all these people who bought awesome homes over the past few years now are putting them on the market. And so I know when we started Airbnb probably 15 years ago upstate, it was like really hard to find a really cute Airbnb, like something that was nicely designed and felt like it was going to be like super clean and nice. And, this has really become much more professionalized in a lot of ways. And there's just a lot of really cool places to rent now. So yeah, as Monica says, it is getting, I'm not sure if it's totally oversaturated, but it is definitely saturated. We'll put it that way. I will say, interestingly, that it seems like the ones that do well, location almost doesn't matter, which is weird. I mean, maybe it matters, whatever. Like if you're going to be next to popular hiking or close to a ski resort or whatever, like there are certain things that are going to help. But in general, the ones that I see doing really well have really amazing design, which means that if you don't have really amazing design, it might be harder, So I think that what we don't know yet, which is kind of interesting, is that as certain towns get more strict about Airbnb, then actually the number of Airbnbs will decrease, right? So that's what we're seeing. So it's like, if that's true, that will really help the oversaturation. And then especially, I know some people whose strategy is to buy Airbnbs outside of towns like Woodstock that are really strict about Airbnbs, which is not like a terrible idea, I don't think. Although towns often like kind of, these things sort of kind of spread to their neighbors often. But I will say that we are working with, we're going to talk about this a little bit more, but if you go to, I'm going to overtype this down, www.gosummer.com. So Summer is a company that we have started working with, and we're going to, hope to work with them a lot more. And they have a really interesting model where you can they will take the home, they will furnish it so it looks totally sick. Some of the guys who founded it are from Airbnb. They basically guarantee you a certain amount of income, and you could either sort of put 10% down and then, well, you have to look at their model to see it, but essentially it's not exactly buying a timeshare, but a little bit, because you get a certain number of days and you can use them at your own house, or you can use them at some of the other summer places, which are now like Miami, and I think Palm Springs, maybe, I can't remember. But anyway, the point of the story is that you can also buy the home instead, and then you sort of pay summer a rental management fee. Look at the model on the thing, but the gist is that it's sort of it's essentially a creative financing solution, but also property management and also design, which is pretty great, because this is a way that like you have some, I don't know, you'd have a partner that also has an incentive to be able to, to do rentals. This is not for someone, I would say, that like, if you're only interested in like an investment, because it's more like if you want to use the home and, still be able to make some money, be able to cover your costs, but maybe not like 100%. I mean, property management is necessary and short-term rental management is necessary for a lot of people, but it is expensive usually. So, that's it. That's like kind of the trade-off. But I would check that out. And more, supposedly what people say is that we are going to see more creative financing solutions. So people are trying to find ways for buyers to take over these lovely 3 or 2.75% mortgages that sellers are sitting on. So they're like looking into things that, again, haven't been done since like the 70s and trying to revive them. Sellers are paying points sometimes. We have not seen this yet, but I think we should, where the seller will pay some money at closing. Buyers can do this now too, to get a lower interest rate. So there's all kind of things that I think could make things a bit more creative. But yeah, I mean, like I said, if I were a seller, I'd get my house out there because inventory is so dang low. If I were a buyer, I'd get out there because there are not very many buyers. And even though inventory is low, people are being weird and picky. I'm sorry, if you're a buyer with our team, you're not being weird and picky, but other buyers are being weird and picky. And yeah, just like thinking that like all of a sudden everything should be 50% off. It is not a fire sale, not by any stretch of the imagination, even if it's easier to negotiate. So yeah, that's it. Don't time the market. Work with us. We're not going to force you to buy or sell anything. We just have a conversation. That's how we're going to do. And hopefully sometime in 2023, maybe we'll be able to help you buy and sell places in Brooklyn, New York City. I don't know. We'll see. Telling myself to simmer down here. It'd be a big step. But does anybody from my team have anything else to say? Any last thoughts? Any other questions? I'm happy to stay here. It is 9 o'clock now, but I can, stay for another few minutes. Anyone? If not, then I hope everybody has a great evening, and tell all your friends to buy and sell with us too, please. And yeah, we're happy to be sharing this with you. And I wish you all a ton of luck. For whatever reason you were here, I hope you got something useful out of it. And I hope that your buying or selling journey unfolds exactly as it is meant to, which it always does. So, there it is. I can be very philosophical about this stuff. Thank you all. Bye.